Good afternoon, everybody. We will start here and let people pop on in. Waiting for Mike to come on here. It's nice to see some of the similar faces every week. Oh, yeah. Okay, Michael, you are on.
Hello. Here we go.
How's it going? Yeah, we'll give another minute or two for people to roll in here. I think they're still getting in, but this is going to be a fun conversation. I think this is your second time on the Twitter space. Yeah, this is a conversation on money, markets, and crypto, guys. Have your questions ready. We'll get to them towards the end of the hour here. Okay. We've got 2 Twitter spaces this week, guys. I hope you join us again on Thursday to talk with the project for the week. Okay. What's there on the Discord? Yeah. All right. I think we've given people some time. They can roll on in here. So why don't you tell us a little bit about who you are, Michael, and why we should trust you when sharing about money and markets.
Well, let me, I guess, reiterate my role at Stargaze. Right. So I'm a developer here at Stargaze. I work on the kind of the NFT transfer stuff. So we're working actively on ICS 721. But we're not here to talk about that so much. We're here to talk about money. So I like to say that my career basically started in the financial crisis, like right in the middle of it. So my first job, like my first full-time internship was at UBS in the summer of 2008. That was fun because almost no one got hired after that. So after that, I went to grad school in Carnegie Mellon. And when I graduated Carnegie Mellon, I went straight to Barclays Investment Bank. And actually, I worked in the Lehman building. So there's that big blue building in Times Square, which was pretty much the epicenter of the financial crisis. That's pretty much where it all started. And so I worked in that. Yeah, I worked in that building. So it's kind of like working in the corpse of 2008, which is fun. Over there, I worked on. So I was part of a graduate rotation program, and kind of what they did is they were like, "Hey, we're going to teach you everything about finance so that you're capable within this industry." So that proved to be quite useful. And then I ended up doing a full-time role in fixed income on the trading floor. So essentially, our role was to support some 300 traders that were using income applications and kind of keep the markets rolling. Yeah. So then, so recently, so in 2020 and 2021, I did a deep dive into finance on my own, and I read about 6,000 pages of finance-related books because I really wanted to understand this crypto thing and the macro play that it is. So yeah, basically, so last year, so on March 19th, on March 19th, I bought 50K of Ethereum, and then I sold it for 100K on May 8th, 2021. And then again, I bought 50K on July 28th and then sold it for 83K. So I had a pretty good year last year trading crypto. And that was actually kind of good and bad because after that, everyone kept messaging me and thinking that I know when it's going to go up or go down. But I don't know when it's going to go up or go down, but I do some technical analysis.
Who knows when it's going to go up and go down?
I don't know if anyone knows, but I have done the deep dives, you say YouTube, and just listen to pretty much every crypto trader out there. And a lot of them, I think some of them know what's up. I don't know if they know definitively what's up. Oh, I think, forgot to mention, right? The disclaimer. Yep, go for it.
This is not financial advice. We are only talking about general macroeconomic trends. And when we take questions towards the end, any questions about the price of stars will just simply not get answered. We're just here to talk about finance and just kind of riff about what's going on in the market as a whole.
Yeah. So basically, whenever you're trading anything, you want to know what are you trading? You got to consider the picture that's larger than yourself. So, as a challenge, try to go back to the Great Depression and buy some equity and try to make money. You're not going to make any money. So, or maybe if you were shorting, I guess. But so yeah, you always want to, one of the things you always want to have that kind of, as we call in information security, called situational awareness, right? You want to know what's going on around you. So Yeah, so just kind of, we're just going to do some kind of broad overview of macroeconomics. So when it comes to crypto and when it comes to kind of these alternative assets, right? So firstly, so if you consider when markets are positive, right, everybody's going up, safe assets are going up, but it's when the markets are positive, the riskier assets is how you get that multiple, right? So you don't want to be owning boring stocks in a bull market because you're not going to get that multiple return that you can get by owning something a little bit more innovative, right? But then conversely, when the markets are negative, as they are right now, well, safe assets are going to be either flat or slightly down, but then riskier assets are going to get that multiple again, but it's going to be on the negative side. So you're going to see things go, from 50% decline, 90% decline, crazy stuff like that. But generally, the riskier it is, the more amplified the price move is, either up or down. So I kind of I kind of wrote everything out in terms of like decreasing, or let's say increasing levels of risk, right? So the most safest asset, as we know, is probably like gold or real assets, maybe real estate, I guess. And then, under that, we have the dollar, which is like the reserve currency. We're going to talk about that in a second. And then you get into like the stock market, like the boring stock, like the Dow Jones. Then you get a little more exciting. You get the NASDAQ. So tech stocks, the FANG stocks and whatnot. And then you have crypto, Bitcoin and Ethereum. That's like one. So now I'm at like level 6 or 5 here that are written down. So, and then you have altcoins. Then you have altcoins within Cosmos, right? Because Atom itself is already an altcoin. And then things that are derivative of that is like an altcoin of an altcoin, right? So it's kind of like you're going to see like that massive price action because, for example, in regular equities, we call that say penny stocks. You might buy a penny stock and it does nothing, or it might go and you get like 100x returns.
Right. And is a lot of that due to the fact that it's so recent? Like gold has been used for barter and trade for thousands of years. Real estate has been around as long as people have.
Yeah. So who's that guy? The Kiyosaki guy. He calls gold. He calls it God's money. I like that term. I mean, you go. I was recently in Egypt. I mean, there was gold goes back 3,000 years, right? So it's a pretty safe asset. And obviously, you want to during these crazy times, you want to look at the price of gold. And I know that a lot of crypto people are also gold bugs. There's interesting correlation there. But anyway. So that's like generally how the price movements are going to go, right? When it comes to risky assets. But as I said before, like, if you're trying to get those higher returns, like you kind of need to be in those riskier assets. But if you don't want to potentially lose a shirt, then you want to be over in the safer assets. Anyway, okay, so let's talk about inflation and deflation. Do you know what inflation and deflation is?
Oh, why don't you explain that to us?
Okay, so let's say you have, so I think this is a pretty, this illustrated it quite well for me, right? So let's say that you were on Mars and there was like one bottle of water available, right? Now, if there was like $10 billion that you had, maybe even $10 billion would not be enough to buy one bottle of water if you were on Mars. It doesn't even matter how much money you have. Because the goods and services available, just the one bottle of water is really low and the amount of money is very high. So essentially that's when money becomes worthless with inflation, when there's low goods and services and high amounts of money. But then if you consider deflation, that's kind of the opposite. Now, let's say you're on Mars again and there's only one US dollar for whatever reason. And now there's like 10 million bottles of water. Now, in order to buy a bottle of water, you spend 1/10 millionth of a dollar. So what has happened in recent times is we've seen this huge surge, this huge inflow of money through the stimulus with the COVID packages, and also going all the way back to 2008. I'm going to talk about that in a second. And then deflation. Probably the best example would be like say the Great Depression, right? So in the Great Depression, I don't know what the unemployment rate was. It's like 25% or some crazy number. And basically what that meant is there was all these people who were ready to work, but there was no work. So essentially, if you wanted to hire someone, you could probably hire them on the cheap. So once again,
a lot of it is supply and demand, right? So like the supply is high, but the demand for it is low because there's so much of it.
Yeah. And the job of the Federal Reserve, right, is going to be to manage the supply of money. When the money supply is too high, it's going to raise interest rates in order to make money more expensive and therefore lower the amount of available money. And then when the markets are in free fall, they're going to lower the interest rate, make money cheaper, so that people are going to want to spend more.
So the interest rate is kind of like a way for them to create scarcity.
Exactly. So that was actually going to be my next point, right? So that's one of the prime directives of the Federal Reserve. And by the way, side note, U.S. dollar reserve currency of the world, which, or at least right now, which basically means it's the default money that you spend around the world, right? So the job of the Federal Reserve is quite important. It's not even just a domestic role, but it's also an international role because of the dollar being used internationally. But anyway, so yeah, going back to interest rates, right? So we know that so let's go back to like I said, career started in the middle of the Great Recession, right? So in 2008, we had that major bloodbath, and all these companies are going under. Banks are there's systemic risk spreading around the world. So what does the Fed do? That's deflation, by the way. So deflation is all these banks are going under. In other words, goods and services uh, or money is disappearing, right? So if a company goes bankrupt, the money that it has is essentially erased, right? So less money equals deflation. So anyway, so everything's going under. There's deflation, and then the Federal Reserve and has to step in and has to stop this from turning into the next Great Depression. So what do? They send all these bailouts and they say, here's all this free money for everybody. And we're going to prop you up so that you can kind of pay off your debts. But as part of that, what the Federal Reserve did is that they lowered the interest rate essentially near zero. So this is going all the way back to 2008, right? So, because I want to be clear, the what we're seeing right now is directly related to 2008. And a part of that is because that is when the interest rate went down to 0%. And since it's been down to 0%, essentially it's never really gone back up. And if you recall what I said before, when the interest rate is low, essentially money is cheap. And when money is cheap, that's when you get inflation.
It's incentivizing people to borrow.
Exactly. Yep. And so there's this thing that I was gonna. So there's one of the books on my shelf. It's called the Carry Trade. It's a bit of a technical book, but it does describe something that's kind of happening on a large scale that people aren't really aware of. So essentially, what happens is, so let's say that in the U.S. the interest rate is 0%, but over, say, in Turkey, the interest rate is like 15%, right? So these people or these entities, the corporations, whatever, who have access to 0%, because not everyone gets 0% money, by the way, but the larger the entity, the more that they can get the 0%. So they get the 0%, and then they say, okay, well, I'm just going to borrow this money, and I'm going to take this money, and I'm going to carry trade it over to Turkey, and I'm going to earn 15% in Turkey on borrowed money. But the problem that happens is, well, what happens if the Turkish money goes under, or there's some crisis over there, right? Now they have to sell that, and they have to sell that in order to go back and pay back the original loan that they took. And that causes a lot of volatility, essentially, because it's a type of leverage trade.
So, I have a little personal anecdote about that. Sorta. I have family in Sri Lanka right now, and if you guys are aware, but there is a massive monetary crisis going on there, hyperinflation. And one of the things was that if you took your U.S. dollars, you could earn, I think maybe it was like 7% or 8% interest on those dollars if you kept them in a U.S. dollar account. But now what's happened is that I believe the government may have seized a lot of that money because their U.S. dollar reserve currency is still low. So that's like an inherent risk of the further away you get from the source to U.S. banks, you run those risks.
Oh yeah, 100%. Yeah, and so it's interesting, and I want to go too much on a tangent, but the country that has the reserve currency has kind of an outsized responsibility to kind of keep this reserve currency stable. But as we can see, the U.S. is not very stable. So it's like everyone is based on this unstable asset. So it's causing lots of volatility around the world as well. But yeah, so I did want to get okay. So so as a now I didn't know if you could like Google this or whatnot, but if you kind of just Google like sugar money rush, something like that, essentially you can find a lot of articles where because we've seen the stock market go super up, right? And everyone's like, why is the stock market going super up in the middle of a pandemic, right? This is crazy. Like people are staying at home, they're not really doing anything. The stock should be going down. And then they'll, they obviously the pushback will be like, oh, well, we got this tech stocks and the future is going to be bright and everyone's going to go out and spend tons of money and blah, blah, blah. But a huge factor in this is, like I said, when the Fed is giving out all this essentially free money or low interest rate money, well, what do you think people are doing with that money? They're putting it in the stock market. And as they put it in the stock market, it's going to prop up those values kind of artificially.
Right. Can you also tell us a little bit about what you think what's stated as the actual inflation, what the inflation rate is told to us, and what the actual inflation rate is?
Oh, well, I don't know if I have the numbers. I think you sent me a thing before. Maybe that has a better number, but in general, so here's the problem, right? So the Federal Reserve uses something called the CPI, but the way that they calculate their CPI they're essentially the amount of inflation. It's like the average basket of goods. Is they don't put in certain things in there that would actually raise it and make it look a lot higher than it is. So people are always arguing, hey, we need to change CPI because it's not reflective of the true economy. And I think something that's not in there is housing prices. If anybody knows, let me know later. But essentially, it's likely that the true inflation rate is considerably higher than the stated inflation rate by the central government. So,
sorry, go ahead.
So that's why, the reality that people deal with on a day-to-day basis might not match the numbers that you see posted publicly.
That site I was telling you about is called Truflation, Truflation, and they do they kind of aggregate information from, I think, different articles. And right now, I think housing is about 11-12%, and the overall inflation rate they called it at 12%.
Yeah. So I wanted to talk a little bit about inflation and how it kind of drives the markets a little haywire, right? So on one hand, when there's inflation, it kind of people get afraid of where they're supposed to put their money, right? And it could drive the price of bonds up. So for example, if you So a U.S. bond, you buy the bond and then you're supposed to get some amount back in, say, 10 years or whatnot. But when we talk about things like negative interest rates, essentially what it means is because your money is being inflated away while you borrow, while you're lending to the government, and the money you get back, essentially your money is worth less by the time you get it back. So it's actually that you're losing money, right? So during this high inflation environment, people are like, well, maybe I should buy gold. Or inflation is considered a type of risk, so people go and head into safe assets. And it's not necessarily it's not necessarily straightforward how to respond to inflation.
Can you talk a little bit about stagflation and what that is?
Yes. So this is the worst. This is quite likely where we are right now. There's a book on my shelves called it's called The New Great Depression. It's by Jim Rickards. And essentially what he's talking about is stagflation, right? So inflation is not bad if there's also economic growth at the same time, or if the amount of growth exceeds the amount of inflation. But what happens in stagflation is both you have a stagnant economy, so there's no growth anywhere, but then you also have inflation at the same time. So it's kind of like it's kind of the worst on both ends. So because traditionally, is that when you have when you have growth in the economy, then inflation is okay. But when the economy is not growing, then essentially you're standing still while your money is becoming worth less. And it's one of the hardest conundrums to get out of. financially.
When was the last time that happened, and what was the solution to that?
I'm not sure. I think there was. I have to look that up, but I think so. One time period that I did want to talk about actually, like that's relevant, I think would be so in 1971, you could in some ways you could actually think of the U.S. defaulting on its debt at that time, and the reason was because the dollar used to be backed by gold, and what happened essentially after that was that I think it was Nixon announced and said, well, guess what? The dollar is no longer backed by gold. And after that, the value of gold went up like exponentially during that. I think it was like the 80s. But it's essentially there was this period where the value of gold went up super high, and then because of the inflation that occurred after we depegged from gold, Paul Volcker, who was the Fed chair at the time, he had to raise interest rates to some like crazy levels. I think it was 20%, or something like that, which was unheard of. I mean, right now with our 0% interest rate, you would never think of going to the bank and getting 20% interest, right? And they had to raise these levels of interest that high in order to bring inflation down. So I believe that was a period of stagflation because I don't think the economy was growing much during that period.
So that was a major lever. What were the main reasons to depeg from the gold standard, and what were the positive and I guess negative effects of that?
Well, at the time, so essentially the value of gold was going up, and because before that the dollar, I forgot the exact amount. It might have been like $35 for an ounce of gold or something like that. And because of that, the true value of gold was going up, but the true value of the dollar was not going up. There was a bunch of traders, I believe they were London traders, that were essentially draining the Fed of all of its gold reserves because it was profitable for them to do that. So Nixon at the time, he was very upset with these people because he felt that they were kind of launching a raid on the U.S. financial system. So the way to stop that was to not honor the trade-in of dollars for gold. Now, and by the way, before this, you could do this as well, but it really wasn't profitable to do so. So people didn't do it to such a degree.
Let's switch gears a little bit and come back to modern times and talk about modern monetary theory and what that is.
Yep. So this is obviously closely related to inflation. So there's two schools of thought. We have modern monetary theory on one hand, and then we have the opposite, the Austrian school of economics on the other hand, right? So there's this guy, his name's called Warren Mosler. He has a book with an unwieldy name. It's called The 7 Deadly Innocent Frauds of Economics Policy, but it's very useful if you pick it up. And you talk about modern monetary theory, which is it's kind of effectively the way that the world's money works. And what he's saying is that in modern monetary theory, the government cannot go broke because the government is a currency issuer, not a currency user. So so the example that he uses, right, is he says, say you have a household with there's 2 parents and some kids, and the parents say, hey, we're going to make some coupons, and we're going to say it's called a chore coupon. And if you have this coupon and you hand it to me, well, then you don't have to do any chores. Now, it's really just a worthless piece of paper that the parents wrote chore coupon on. But now they have value because the parents are honoring this coupon. So now those kids might decide amongst themselves, hey, I'm going to buy your coupon for $5 so I don't have to do laundry this week. And kind of a market is created. And this is actually the exact same way that a fiat currency, such as the US dollar, is bootstrapped, because the US government says, well, you got to pay taxes, and you got to pay taxes in dollars. You can't pay it in some other currency of your choice. So by virtue of them forcing you to pay in dollars, it kind of gives the dollar value. And this was in response to when people were saying, oh, we're printing too much money. And he was saying, hey, actually, the government can print infinite money. There's nothing to stop it. And if you think of, say, the game of Monopoly, if you play the role of the banker and then you run out of money to give people, well, then you just take out a piece of paper and you write $100 on it. And now it's worth $100. So does that make sense for modern monetary theory?
Yeah, I mean, sure it is for me. There's also something I remember hearing about. Inflation kind of only exists because we think it exists. Anyway.
I don't know if we've entered the matrix with this question. Uh, but maybe I think what they mean is, well, okay. Uh, Again, don't want to go too far in attention because I want to get back to Austrian School of Economics. But there's another book. It's what's it called? It's called Money, the True History of a Fake Thing. I think it's something like that. Check it out on Amazon. And essentially, this book is just basically discussing that we don't really know what money is. If you go throughout history, I think in the U.S. there was one point where there was like 2,000 different currencies, and you actually needed a book, like a catalog, to like look up how these different monies traded with each other. So money has never really been a straightforward thing, and that's why it's kind of surrounded by this cloud of ambiguity. If that makes sense. Which is why the Austrian School of Economics, my next point, is such an important counterpoint to modern monetary theory and this kind of inflation-based economics. And it's colloquially known as the hard money theory, if you will. So what they're saying is, if it's not backed by a real asset, it's not worth anything. It's pretty simple. It's pretty straightforward. And kind of their view of this is that if, as an investor, you should ignore all this kind of artificial inflation of value, and you should just buy things that have a true fundamental value. And I think to some degree, I'm not saying that he is, but I think Warren Buffett might be a little bit of an Austrian guy. The way that he was basically saying, "Oh, I would buy, say, farmland, but I wouldn't buy crypto." He said, we'll talk about that in a second, but he's basically saying farmland is a real asset, so it's worth buying. And under the Austrian School of Economics, well, you can't just print money because it's going to just have no value.
Right. So the Austrians believe something has to be backed by a hard asset. I guess how do you say, Dickensians or the modern monetary theories believe that it doesn't necessarily have to be. We can just keep printing more.
Exactly. If you want some entertainment, definitely go to YouTube and say Austrian School of Economics versus modern monetary theory and see these people get at each other's throats. It's pretty fun. But there's a little bit of both out there, obviously. Warren Mosler is not wrong about modern monetary theory, because actually this is the way money works. Like he's not saying this is my opinion. He's saying this is when I work in finance, this is the way I saw money actually working in the real world. But anyway, so let me move on to 2020 and the $1 trillion stimulus bills, which there was quite a lot of that. So as you all know, I believe it's about. Yes.
But I see a couple of people that want to speak. We'll take questions in a little bit here, right after we finish talking about this stuff.
All right, you let me know. I'm always ready for those questions. All right, so 2020 and the $1 trillion stimulus bills, right? So I was googling this. I believe it was about 5 trillion was spent in the pandemic, and by spent I mean printed. So the M1 money supply, which is essentially a measure of how much money is out there in the world, went from 4 trillion in 2019 to 20 trillion in 2022. I think that's a 400% increase. And also the US debt went from 22 trillion in 2019 to 30 trillion in 2022. So that's a lot. The more debt a country has, the less able it is to withstand a raise in interest rates, as we are seeing now. The more that is spent servicing interest on the existing debts, and lastly, the less room it has to spend to stimulate growth. So now that we're super in debt and our money is becoming worthless, the Fed is kind of out of bullets, as they say. Like I said before, with that free money, low interest rate, if inflation becomes an issue, well, if they raise the interest rate, all those people that were addicted to the sugar high free money, well, all that money is going to go away, and it's going to cause the market to crash, as we are seeing right now. So there's that. And so I just got a couple more points here. I want to talk about stock bubbles and then crypto, and I think that's all I have. And then I guess we can move to questions. Does that sound good?
Sounds good.
All right. So stock bubbles, right? So when there's a lot of hype in a particular part of the economy, a bubble can form. I wanted to state that this is nothing new. In the 1840s, there was a bubble in railroad stocks. I mean, can you imagine a bubble in railroad stocks today? It's pretty crazy. Like, who cares about Amtrak? But, at the time it was all the rage, and it was basically the crypto of its day, was railroads. And, yeah, eventually that bubble popped. But the funny thing is, well, railroads still exist, right? So it's not like if you bought a real railroad that you made a bad decision, but, obviously your investment was mixed in with the mania that's surrounding it. And I think the best modern example of this would be in 2000. So Amazon, and you can go and look at, the price of this. So I think Amazon was at the peak of the internet bubble in 2000. It was about $100. And then after the crash, it was $7. That's a pretty massive crash for what is now like one of the world's most valuable companies. By the way, Amazon is now worth, I think, $2,500. So that's like a 350x from the low. And so point being, but then conversely, something like pets.com, which was just part of the mania, well, that doesn't exist anymore. So, the thing to see here is like when you're investing in a bubble, like you're going to see that volatility, but it doesn't necessarily mean that it's a bad investment, but it may get quite scary during the bubble, right? I mean, can you imagine buying Amazon and then seeing it go from 100 to 7? You'd think you made like the worst investment decision of your life, but maybe, but if you, at least when it comes to Amazon and not pets.com,
I do
but
to mention that. Do you know who the number one, I think, holder of Pets.com stock was?
who?
I think it was Amazon and Jeff Bezos.
That's quite meta. Well, anyway, so obviously, cryptos are all cryptos, by the way. I mean, we've seen some crazy bubble mania in crypto. I mean, it's undeniable. But the other thing I was going to say is, we have $2 trillion in crypto right now. And it's been in existence effectively since 2009. So similar to the tech stocks in 2000, it's likely that crypto is not going anywhere. Is it going to be worth the insane valuations that it's worth right now? I don't think so. But who knows where it's going to go in the long term? And, some of these might become the next Amazon.
Right. Yeah. We just don't really know. It's still very early.
Exactly. And like I said, I want to go back to what I said in the beginning, which is, go back to the safety hierarchy of assets, gold on top, then the dollar, then the Dow Jones, etc. And, it's all about your risk tolerance, So if you don't want 90% of your money to disappear, well, you might want to be in gold, or you might want to be in real estate or something like that. But if you're feeling really brave and you're like, I got money, I don't care if I lose this money. Well, maybe cryptos is more worth your risk appetite. And by the way, that's why we say diversify your portfolio, right? So, all right.
Do you think something like a financial crisis like 2008 could happen again, or would it look any different right now?
So one of my favorite resources, Peter Schiff, if anyone knows Peter Schiff, he's a bit of a pessimist, but he would say not only are we going to get 2008, we're going to get 2008 times 10. I hope we don't. But I'll tell you this. If you listen also to Ray Dalio, who talks about the changing world order, and there's some good talks by him, it's certainly within possibility that the U.S. is seeing it's like a decline of empire that would cause something worse than 2008. It's certainly a possibility. Is it a certainty? No. But when you see this kind of movement in the market, you really have to pay attention and say maybe the worst is possible.
I mean, to be fair, Peter Schiff has been calling a crisis for the last 20 or 30 years.
Like I said, a bit pessimistic. I appreciate him, though. I appreciate it.
Yeah. So for people who may not know, is Peter and who's Ray Dalio?
Peter Schiff, he's the proverbial gold bug. So he's got this gold fund that he's always talking about. And, when the economy is bad, then gold is good, right? And then Ray Dalio. So I mentioned him before. He's got those. He's got some books out right now. One of them's called The Changing World Order. If you really want to know this stuff, read that book. It's a really good book, and he's got a lot of interviews. You can listen to him. But essentially, he is the CEO of Bridgewater, which is the world's largest hedge fund. And he's got a lot of talks out there about how market cycles work, both on kind of the smaller market cycles, but this larger market cycle that we're seeing, which is like 100-year type of cycle.
Okay. And where does he think we are in the cycle right
So he in the book he talks about 6 different stages. Where 6 is like a civil war or a or a World War II. We are currently in the stage 5, according to his book.
Okay, so we're one stage away from civil war.
According to Ray Dalio, and I just saw him in a talk last night. He pegged the chance of civil war at 40%. Yes.
Pretty high.
Yeah.
Okay, well, let's switch gears a little bit and talk about NFTs and how they can relate to this financial crisis. Like, are they could they be a good investment? Are they a good investment? Why or why not?
So I think like the trade-off here, okay, the switch, it's like the great switch, if you will, which is okay, so we have this fiat money and this has been the standard and it's the world reserve currency and all these things, right? And now we have, and this is a big reason why I read all these books, is because what is crypto? It is a macro play on fiat money. I mean, because it is an alternative currency. And why do we need an alternative currency if the regular currency is doing just fine, right? So you need to understand the strengths and weaknesses of the existing system in order to understand what an alternative system would be promulgated, such as crypto. And we started this story with Bitcoin. And NFTs are in that same vein, which is to say, so it's interesting. I feel like, and this is just my personal opinion, no, not financial advice. I feel like, okay, so when the market is like really popping off and it's doing great, NFTs, great investment, because it just goes up with everything else, like super leveraged, right? When the market is tanking, as we see right now, it's a bloodbath out there. It's not so easy to own NFTs right now, at least for monetary reasons. Then I feel like on the far end, when say like we're doubting the value of the dollar, when we're like, like what is the next new world order? Like we need to build a new currency. I really feel like at that point, that governments around the world are going to say, well, we have this massive crypto infrastructure. Why are we not using this instead of just creating more paper, monopoly money? And I feel like in that environment, NFTs are going to have a huge value. So there's that. But there's also just the practical use of NFTs, which is obviously where we are right now, which is, hey, I'm an artist. I can make, instead of my art having no way to buy it, now there's a direct way to own it. And that has a utility, and utility has value.
Right. Okay. So it's the utility behind the NFT.
So if we take the Austrian view, the amount of utility that the NFT has is the real value. And therefore that would have some number next to it. Is it $10? Is it $20? Is it $30? So there's the utility, and as long as NFTs have utility, then they have value. Then on a more macro scale, as I mentioned before, if there's some craziness with fiat money, we might see an environment where people are thinking about using alternative currencies, and NFTs exist in that basket of alternative currencies.
I've also heard that there's a psychological motivation or demotivation to sell an NFT less than what you kind of purchased it for. Can you talk a little bit about that?
Oh, so wait, can you say it again? So there's a spike in people just selling your NFTs,
there's a psychological kind of demotivation for you to sell an NFT or like a piece of art that you have for less than you bought it for. Like you don't want to do that.
Oh yeah. So it's basically like if I buy a chair and then you want to buy my chair, like I don't want to sell it to you because now it's my chair.
Exactly.
Okay. Well, I mean, I think that's the same thing with art, right? So if I buy a valuable piece of art and I hang it on my wall, and then someone says, "Hey, I'll pay the fair market value for it," if I also now have to price in my emotional attachment to this piece of art on my wall, because if I take it off the wall, then my room's going to look different. And that's just basic human psychology. But obviously, the art market has existed for however many years it's existed, and it's done just fine. So I feel like NFTs will probably be operating the same way. There might be some people who buy their punk and don't want to sell it because it's theirs, and there might be some people who are more agnostic and say, you know what, I just want to make $1.
Yeah, sounds good. Well, we're gonna open it up to some questions now. there's one speaker up right now. Lolly, do you have a question? She may have a step.
You read The Ascent of Money.
That again, the what?
The Ascent of Money.
I haven't.
Let's book club it. Let's book club it. It's amazing. It's basically about the history of like how money came to be and how borrowing and lending came to be in the bond market that is like the base of many countries in war and money and like the incentives of making it and why. And it's just so vital because we use it, and I believe we're in maybe like the middle of the greatest transfer of wealth, at least in like known history, or something that's happening now with crypto. Maybe I should be listening to these pessimists a little more. But I highly recommend everyone read this book. It's called The Ascent of Money. And it's about the TLDR is like how money came to be and like how a lot of this is based on kind of like Italian economics. And yeah, it's amazing. So and basically how money is faith. All it is like an IOU. All it is faith. So if we believe in something collectively, that creates currency, which is what we're seeing with the purest example of it, I guess, is Shiba, right? Or Doge or whatever, right? Or any crypto, really. So I think it's important to read it. Also, thank you to hear you talk.
Yeah, I mean, I would strongly encourage anyone who owns any kind of crypto to read a book such as this one, because you really need to understand what money is, because we're over here making alternative money, right? What are we making an alternative to? So, and congrats on the sellout, by the way.
Oh, well, thank you very much. I'm about to turn one of my pieces into a pun not intended, a rug. It's like a physical I'll share photos once I have it, and I'm really excited.
We do have a question from the Discord, and that's about, do you think Tulip Mania is similar to a movement to like a Bored Ape Yacht Club?
All right. That is a good question. So the book on my shelf, it's called Boom and Bust, and it is a whole book about bubbles. And there's different kinds of bubbles, right? So for example, if we look at the 2008 crisis, that was a bubble in the financial, like in mortgages, right? And the end result of that is that nothing good happened, because it just inflated assets, and then when the assets crashed, it was hard to recover, right? But then conversely, like the railroad bubble, that's what we call a tech bubble. And we just saw that in 2000, and I mentioned the case in the railroad with the railroads. And that's a situation where too much money flows into innovation, but it's more of a positive bubble because we still have railroads today. You can go take an Amtrak. So there was an overinvestment in trains at the time, but trains still remain. And I think this is closer to what crypto is, because as I mentioned before, I think that crypto is here to stay. I mean, we have, like I said, I don't think $2 trillion is going to disappear. And I don't think was it like almost 10 years of history is going anywhere. So I think there's a lot of things that are telling us that crypto is here to stay. So if it is a bubble, I would say it's probably closest to the tech bubble, or it's closer to the railroad bubble.
Okay. All right. Guys, the floor is open. If you guys have any questions, you want to ask Michael here, you are welcome to. Please raise your hand or request to speak.
Until yeah, I mean, until someone else, I'm happy they'll be in at least. Okay, so anyways, hi. Then what do you what is your portfolio? Where's your belief system around crypto? What crypto train, or if you will?
Well, I think I'm very allowed to say I'm on the Stargaze train.
You're on the Stargate rocket. Well,
I think I am allowed to say, right, because we did give the disclaimer and everything, right? I do legitimately believe in what Stargaze is building. I'm not chilling, I swear. But but I do think, for example, like I do look in general like the idea of proof of stake crypto. So I think everything in Cosmos has a lot of opportunity because I think the idea of destroying the environment just to have crypto is a bit insane to me. Not to offend like Ethereum maxis out there, but I do think efficiency is something that's important in tech, and people have been complaining about that for quite some time, and now we actually have an opportunity to make a sustainable tech here. So I think Cosmos chains are certainly in the right direction. And lastly, anything that has the interoperability, and because the way I see crypto is, I just think that it's really gonna like it's really gonna be kind of these domiciled chains, right? Like app specific chains as we call them, right? And then they're self-managed, but then it's the interoperability which creates kind of an emergent macro ecosystem. And so I think chains that are out there in isolation and that are burning energy and stuff, I think they're not going to last. But I think interoperable chains uh, that are efficient, like proof of stake, are going to be here to stay.
Great. You got a couple of people with questions. Loop Innovations. What's your question?
Yeah, I'm just curious about central exchanges. Basically taking what they see in decentralized applications and kind of biting off of that. What are your thoughts on these big players that are coming into the space?
Can you give me an example?
The Coinbases of the world, the Circles of the world, kind of like just coming in and saying, "Hey, we have big VC money. We see what you're doing. We're gonna take that. Thank you."
Do you mean that they're running like centralized validators for like proof of stake consensus mechanisms, or are they like, you mean like borrowing and lending?
All the above. All the above.
Wait, okay. So, does anyone, it's funny. Does anyone know that guy on YouTube, Tech Lead? You know that guy? Well, he's hilarious. But anyway, so I was just listening to him on YouTube, just like casually, and basically, you just started. I didn't even know that he was into NFTs or anything, but he just started riffing about OpenSea. It's centralized, and like you can't even find your NFT unless you look at it through OpenSea. And it was kind of surprising to me to kind of just like hear this like randomly, because this is basically like the exact reason that we built Stargaze is to not do that. And so there's always going to be tension between these centralized institutions and the decentralized institutions. I think that both of them will exist, but I think it's kind of like, I don't know how to say it like any more academically, but I just feel like the decentralized community is always going to be cooler. Is no way to spin it, I guess. Like it's always going to be ahead of the centralized community, just like any large tech behemoth. Like if you see, like, for example, like Facebook, like buying all these small companies and whatnot, that they didn't do that innovation, they just bought it. I think that's kind of what's happening, because the ethos behind decentralization is that a small group of people can have a large impact, and they're going to be able to, just like that book, The Innovation Dilemma, where you're always seeing small actors having an outsized impact. So I think we're going to see the trends being set by the decentralized, and that's going to be how they're going to capture more market share. And I feel like centralized institutions are always going to be kind of playing catch up.
Can you do me a favor and like make a list of all these, if you remember any, or like shoot them in the Stargaze Discord or something, like all these, you're recommending all these things and they're so good. And I'm back.
Aurora, can you help me with that?
Basically, including the well, guys. So you can always go back and listen to it, but we'll have them centralized somewhere so you can find.
I mean, honestly, I think that would be a cool, like, either like there's not enough channels in the Stargaze Discord, but but maybe like, the recommended reading or recommended, because it's like those are all, you just threw out so many good, like, what did you say, The Innovation Dilemma, a bunch of other, like that YouTube person. I see a bunch of money because I'm a genius. Just kidding, but no, but they're like, I would love to, yeah, like, it's something that I noticed in tech in general. as like a former hippie slash still artist musician who resists technology in some ways, but not really, because here I am. But I noticed something coming into tech is that there's alignment around reading materials in a sense. Like there's like trends in tech and what people read, and like who are in tech, who are kind of like, it creates this kind of like alignment of philosophy in a sense. Like there's some like big famous, like I don't know, back in the day, like the 4 Hour Work Week was like a really trendy book to read if you were in tech or whatever, you know. So it's like I think it does create some kind of like collective consciousness or collective philosophy that guides people, and it creates community, and it creates like rapport, like philosophical rapport, and like mind rapport that allows for creation of all sorts of cool things, because you're kind of like you kind of like have read similar things or are listening to similar things, which is personally also why I'm divesting from the news, because it's not populating my mind. And Repop stands for repopulation of the imagination. Little plug. But anyways, that's what I honestly would say. So I really think like either a Stargaze Discord channel or something where we can like hop in and look at materials to read or align on.
Well, yeah, you know, innovation and rebellion go pretty closely together, right? I mean, look at the Apple days, right? So
One more thing I kind of wanted to talk a little bit about the centralized service is that I think we're all here in this Twitter space because we like being decentralized, but there is a place for these decentralized services. I mean, that's how most people get their crypto. You know, they transfer it to an exchange, and a lot of them don't want to manage their private keys or deal with what happens to it. There's also like tax implications of that. So like there is a place for these guys, but there's also downsides to like staking with the centralized validator like Binance. You would not have gotten the Stargaze airdrop if you did that, because we specifically excluded them. So there's pluses and minuses to both of them. Yeah, that's pretty much what I have to say about that. And any other questions from the audience, guys?
Yeah, one more.
Yeah, go ahead.
Yeah, I'm curious. Do you think there's gonna be a recorrection? You might already covered it, so I apologize. But yeah, I'm just curious as to are we gonna see a major recession with both crypto and equities?
No one can tell the future. I'll start with that.
I can only speak from the gut on this, which is I don't know, like if you ever I get like that. I guess I get that bad feeling kind of about like okay. So if you ever knew someone who's like kind of shady and you had like a suspicion about them, and then they did something and you're like, wait a second, that didn't seem right, but you weren't like able to confirm it, right? But then like maybe like a year or 2 years later, you found out actually like this person was like much worse than you thought. Like that's a similar feeling I got when I saw interest rates on bonds spiking, and you know the DXY going crazy and the market's crashing like 20%. I'm like, okay, I guess we could recover from this, but something feels like wrong. And so I don't know, obviously, but I don't like it. And I would advise people to be not financial advice. I'd advise people to be very careful right now. I do think big changes are on the horizon. And in my personal assessment, I think that if we're looking at like 2024, 2025 time horizon, I think that's when like we'll see like crypto really taking off.
All the same. Yes.
You guys, any more questions from the audience? We're coming up on an hour here, so I want to make sure everyone who is able to ask a question is able to.
And you know, by the way, I mean, you probably see me on Telegram yelling at people. Remember macroeconomics. So I do love talking about finance. So if anyone ever wants to just riff about markets and whatnot, I will do so with a disclaimer at the end of every text. But I do find this stuff to be incredibly fascinating.
Oh yeah, this is a good one. Why are central bankers still bad at their job?
Politics. I mean, the thing is, well, let me put it this way. So when you're a central banker, you might know that the correct action is not to give everyone free money. Like say in 2008, we could have just not bailed out the banks, right? But obviously we would have had the financial catastrophe. And maybe it would have been best to just rip the Band-Aid off that then, and maybe it would have sent us into 10 years of a recession. And everyone would hate that central banker, and everyone would hate those politicians, and they would blame them and say, "How could you do this?" or whatever. But the thing is, like, when you operate in that capacity, is you cannot make those type of hard decisions because there's just too much pushback from the world. I mean, it's one thing to make a hard decision for your life to like walk away from someone you shouldn't be with, or like to quit a job or whatever, and like deal with that depression in your life. But to do so, like when like 350 million people's lives are involved, it's a much different game. So I think what they do is the only thing they can do is to kind of do the thing that looks right in the moment.
Right. Yeah. So they're just trying to do the best job that they could given the circumstances they were in.
Yes.
Right.
Or but out of much and delusional, that's also an option. You know, and greedy and like corrupted by power. Just throwing out that.
Well, so another recommendation for all y'all. There's a book called Evil Geniuses, by Kurt Anderson. And he goes into the deregulation that occurred during the 80s, and kind of the power structures that are involved with money as well.
What are some periodicals you'd recommend?
I only read books. Periodical.
So we need blood from the 1800s, ladies and gentlemen.
I mean, we could see in your profile picture that wall of books right behind you.
Yes. I think I don't know. I mean, what's that, like Trading Alpha or something? There's like, I mean, you can just Google stuff, but invariably, I feel like you're going to end up on YouTube, and you'll be listening to Raoul Paul. You'll be listening to Schiff, Ray Dalio. I think it's easy. Like if you're going to go to a periodical, maybe go that route.
Okay.
And also Naval. Listen to Naval and read the Naval Almanac, please, if you haven't.
Beautiful. All right, guys. Well, we're about an hour here, and I think we've gotten to all the questions. Is there anything else you want to tell the audience, or you want to mention about money, markets, and crypto?
This is going to be a very interesting time in history. I'll tell you that.
Man, we're living in it.
We are living in it. And one more. Give a nice read, a nice look up of a book called The Fourth Turning. That is, we are there. We are in the fourth turning, according to William Strauss and Neil Howe.
A quick summary, or what is the fourth turning?
Basically, every 80 to 100 years is a massive shift in the world order. The last one was World War II, and the one before that was the Civil War, and the one before that was the American Revolution. And now we're here. So, and now we have COVID and whatever is on the horizon.
Well, this was a super fun conversation, and I'm really glad we did it. I learned a lot, and I hope you guys did too. Thanks a lot for coming on and talking to us.
Have a good one.
Yeah. All right, guys. Hope you guys have a great Tuesday, and I'll see you back on Thursday. Have a good one. Bye, guys.